Hello, everyone, and welcome to the show. So this is a Captain's Log, an accountant's guide to the galaxy. We are on stardate 230123. I'll have a little confession to start with that normally I record these shows straight off the bat. I leave in any errors where I stumble over my words and things like that because I think it's good to keep it real, and let's get a bad press that we're dull, we're boring, and etc. And this show is partly about blowing those myths away, but also it's just about being real and relatable. We all make mistakes, which is ironic. I'll come back to that in a minute. But actually, this is take two. So with take one, it all just seemed to go wrong. I forgot how to press buttons, so things were popping up in the wrong order. My show notes fell down, so I couldn't read them. I completely lost my train of thought and couldn't find it again. Looked down the back of the sofa, it wasn't there. It had just vanished. So knock that on the head, and we are on take two. So this is a careless whisper. Ooh, what's all that about, I hear you say? Is it because I feel so unsure as I take your hand and lead you to the dance floor? No, it's not about Wham. This is not a tribute podcast or show, if you're watching on the video, to Wham. It is indeed about, actually, rather than a careless whisper, it's more a careless mistake, an expensive mistake. Yes. We are going to cover Nadhim Zahawi and his recent tax dealings, we'll call it. I'm not going to say shenanigans. I like the word shenanigans, but it doesn't feel right to use it in this instance. So we are going to talk about Nadhim Zahawi and his current tax issues. But it's been resolved now, so there's no more issues. So what has happened? Well, Mr. Zahawi became the Chancellor in, I believe it was July in 2022, and stayed there for a while before we had the musical chairs, where it seemed like everyone got a chance to be Chancellor for 10 seconds when the music stopped. But I'm not going to go into that because I don't want to do politics in the show. I don't care about red or blue. This is an accounts and business podcast. It's not political opinion. But we had this musical chairs effect of chancellors. Now, when Mr. Zahawi became chancellor, he was under investigation from HMRC. That's not unusual. That's the second music reference, is it? It's not unusual. I won't sing because my voice isn't ideal at the minute. So, yeah, it's not unusual. HMRC do a hell of a lot of investigations each year. Stands to reason that because the amount of money that flowed out of the Treasury during the pandemic times, that they'll be doing more investigations to try and get more tax back. It makes sense. So, like I say, it's not unusual. You can be called up for an investigation for a few reasons. It could be that you are in a postcode that tax fraud or tax evasion is prevalent. It could be that your name is very similar to people that have been involved in that. It could be your business sector. There's many factors. It could be purely that your name just got pulled out of a hat and you were unlucky to get investigated. So there's many different factors. Having an investigation, it doesn't necessarily even mean that you're under suspicion of anything. It's just something that happens, and it's a pain if you have to deal with it. But it's kind of reassuring to know that HMRC are caring and looking after the money that comes in to it. I can't believe I've just praised HMRC there. That's just mad, because that's the second time this week I've praised HMRC. If you are listening, Mr. HMRC, please note I was very appreciative of the conversation I had with one of your agents this week. They were mega helpful, and that's the second time I've praised you this week. So keep up the good work. Right. It's been discovered that Zahawi had an issue with his tax affairs. The result is the end of the investigation has now ceased and it's been closed. It's been closed because a settlement has been arrived, and Mr. Zahawi has paid just short of 5 million. I don't know if you saw that fly past, but that was one of my show notes. I don't know what is going on. That one doesn't want to feature in there. Right. Yeah, so it's been settled. Obviously, Zahawi had like 5 million in loose change that he could just quickly settle. But that's a separate issue. But it's been settled. And that's it. Basically, case closed. It won't be because it's politics and it's Punch and Judy. But that's a separate argument, isn't it? There seems some level of confusion over the actual reasoning behind why this investigation was concluded and why 5 million was paid out. But to give you some background, the whole case centered around something called YouGov. I'm sure most of you are familiar with YouGov. It's a polling website where they get people's opinions, and it was a YouGov survey said 99 people have never been surveyed before, and 1% actually have, that sort of thing. So turns out, and I never knew this until I did the research for this show, the Nadhim Zahawi was part of the founders for this. Literally had no idea. And it's been around relatively recently. This was sort of circa 2000 that it came about, before he was an MP as well, before he was an MP. So he had shares in it, and that's where the issue seems to have centered. So let's look at this. That if you've got shares, there's two sort of taxation angles you could be looking at broadly. The first one is you would pay dividend tax if you earn dividends off your shares. The other one is if you make a profit on those shares and sell them, there's capital gains. So there's two broad ones there. And that seems to be what's happened. Many years later, YouGov had become very popular, so it was bought for several million. Now, it's quite interesting that it's been bought for many millions, because I don't understand how you monetize that. But again, that's not for me to be delving into. I'm an accountant and I'm a business owner. So let's focus on the stuff I do know. And that is that once they were sold, there seems to be an issue around the treatment after that point. Things aren't clear why or how or even the level. And I'll cover that shortly, why there is this, not mystery, but uncertainty. So it appears that the shares were held in trust. This is not confusing. It's confused the issue, but also it's added some intrigue here, because it's not entirely clear. Like I read some articles doing my research, and Nadhim Zahawi's father's name is brought into this because it's not just a trust, it's a family trust. So potentially there's multiple family members that have got a vested interest in this. But anyway, when it all boils down to HMRC weren't happy. Mr. Zahawi thought he'd done the correct thing. They have now come to a settlement, which has brought matters to a conclusion. It's just under 5 mil that's been paid. Case closed, done, dealt with. Let's move on. So the questions have been asked whether he should stand down, whether he should be penalised, what that penalty should be, etc., etc. Now, first of all, I have no interest in getting into whether he should step down or not. That's not something I'm not gonna dance with that at all. What I am going to look at is the penalty part and the size of it. So I started off with the title of A Careless Whisper. It wasn't random. It was deliberate, because careless is important. Also, is it a reasonable mistake? So that's what we're going to look at to start with. Was it a reasonable mistake? Was it a careless mistake? And you might be there thinking, well, what's the difference? Same sort of thing, isn't it? And outside of legality and HMRC, the everyday punter on the street, yeah, there's probably not a lot of difference between a reasonable and a careless mistake. However, from a legal standpoint, and certainly from a HMRC standpoint, it matters. It matters if you made a reasonable mistake or a careless mistake. And there's actually a third sort of mistake we can bring in, which is deliberate. Now, let's be clear. It's not been even hinted at this is a deliberate mistake, but I'm going to bring it in because I thought it's worthwhile to see the difference. So a reasonable mistake would be exactly what it says. This is a Ron Seal moment. Is it reasonable for that person to have made this mistake? Because let's be honest, the UK tax law, it's not straightforward. It's very complex. It's very complicated. It's reasonable to expect there to be mistakes from times. Then you bring in a careless mistake, which is different. So a reasonable mistake, quite often, you may well end up without a fine. And sorry that I'm being very vague with my language because it's a vague subject. But if you make a reasonable mistake, quite often you will find that you don't get penalized. You will have to pay back the tax that has been omitted, probably have to pay some interest. I say probably because you might be able to negotiate that down, depends on the settlement and what HMRC's view on that reasonable mistake was. A careless mistake is very different. It's almost getting to the point of being negligent, that you haven't paid attention, that you have omitted something, not reasonably, but because you didn't look and then include it. It's a technicality, but it's an important one, because when you start to be careless, it may involve a penalty. It depends on the level of the carelessness. So it seems that this Mr. Zahawi has come from the angle that it's a reasonable mistake that's been made. It seems that a statement from HMRC has stated that it's a careless mistake. And it does appear that there has been a penalty involved in this. And I say it appears, it's not clear. So the media seem to report in the interest of about 30% was paid of the mistake. And that's the penalty for it. It doesn't matter. Like it's something like 4.8 million. It's been paid. But it was a careless mistake. He should have included it in HMRC's, but didn't. You have a deliberate one. This is very hard and fast with this rule. That is where you have deliberately done something to not declare that tax or not declare the income. It's a deliberate act, and the penalties for that are quite rightly very severe. This is you shouldn't do any of these. You shouldn't go down the route of reasonable, careless, but deliberate. It's the big no. You are going into the realms of, rather than it being tax avoidance, you could even look at it being tax evasion. And again, some people on the street don't know the difference. The media even seem to not know the difference. And I'll go for it. So tax evasion is where you have deliberately done something to not pay tax. Like, you should have paid it, but you've deliberately done something not to. You have evaded it. Like a football would take a sidestep to evade a tackle. You have took a sidestep to evade that tax. Tax avoidance actually, so tax evasion is illegal, I should say. Tax avoidance is not illegal. It just gets more into the realms of whether it's morally questionable at some levels, because there are some extreme tax avoidance schemes out there. But it could be viewed as things like R&D tax allowances. That could be viewed by some people as tax avoidance because you have employed a strategy to avoid paying tax. And I guess it's a good time to bring this up. If you claim mileage, you've avoided paying tax on that level of income because you've offset it. The R&D tax allowance, you've avoided paying tax because you've claimed the extra amount that you're allowed as part of the R&D scheme. They're both completely legitimate and allowable. However, it's a bit like if a plumber comes around your house, does the job, and then you pay him cash. All right, governor, discount for cash, that sort of thing. That's tax evasion because you are paying cash to get the 20% discount. So it's evasion on the VAT front. There's a difference in that, and deliberate mistakes tend to go towards evasion. Severe penalties, don't do it. Right. Now, realistically, you should avoid making mistakes. Not avoid paying tax. Avoid making mistakes. How can you do this? Well, the easy one is for me to go on a sales pitch and say, use an accountant, and ultimately that will help. Well, what can you do yourself? First one is keep good records. This is something that some sectors maybe not as good as other ones. Thinking about you cheeky builders here, that how often do you collect receipts, chuck them in the glove box or the side pocket of your van? They get lost and stuff. This is about keeping good records. So yeah, keep good records. Things like Xero, QuickBooks, Free Agent, and other bits of software are fantastic for enabling you to do this. But you know what? Not only will you be compliant, it will help your business because you'll be able to make some better decisions. So keep good records. The next one, and it strongly links into this, and I've hinted at it with the receipt thing, is keep the receipts. Depends on whether you are a sole trader, whether you are a limited company, whether you're VAT registered or not. The period of time of keeping your records and receipts does vary. I would say as best practice, you really want to be looking at a minimum of 7 years to keep these things. The problem comes then, keeping 7 years of records and receipts could put you in the territory of you becoming a bit of a fire hazard because of all that paperwork kicking around, which is why we at Careless Associates strongly recommend you use an online data storage facility. You can put them into OneDrive or Google Drive, any of those things, iCloud, etc. Or you can use something like Dext. Dext is what we prefer because it's got some other cool features. And with that, it's electronically stored in the cloud for many, many years. But also, if you hook it up to Xero, it creates a duplicate record. So it's ace. And you don't have to worry about the sun destroying the ink on there or oil getting across your receipt. I mean, it goes transparent. You don't have to worry about it being flooded and getting problems like that. You don't have to worry about it being washed in the back pocket of your jeans because you've already scanned it. All these things are avoided by keeping good records, which involves keeping your receipts on an electronic format. So Dext is ideal. There are other ones out there. What else? Now, this is the note that kept falling down. So I'm sure it doesn't want me to talk about it. So I'm going to talk about it. Know the rules. This one is a biggie because they are not straightforward. I'll give you an example of the rules that aren't straightforward is interest payments on mortgages. For many years, if you were a sole trader that was a landlord, you could claim the interest payments and offset it against your rental income. That started to be phased out. It's now pretty much being phased out. However, if you're a limited company, there's different rules for what interest rates you can claim back. So if there's a different rule between being a sole trader, tenant, landlord to a limited company landlord. And some people don't know that. There are other ones because the UK tax laws are complicated. This is why this is not a sales pitch, although it kind of is. This is why it's better to pay an expert and speak to an accountant because we know the rules. This is why you get specialists in different areas. And linking on to that subject is know the tax. So, and it sounds boring. Why would you want to know? tax, but it's important because the thing is, with tax, you have different tax bands, but also you have different tax types. As we talked about with dividends, not dividends, shares. You could be taxed on the dividends from those shares. You could also be taxed on the gains from them. And that's just one thing, but it's two types of taxes. When it comes to dividends, you then have different bandings for how much you're earning. So you pay a different percentage. And that different percentage, even though it uses the same categories as income tax, is different percentages. Can you keep up and see why it's complicated? Income tax, there's multiple different bandings for that. You've got your tax-free threshold that you can earn, literally, the Ronseal one, tax-free. Then you've got the 20% banding. Then you've got the 40%, and you've got a 50%. In Scotland, you have a 19% one. So these things really aren't straightforward. You've got then income tax as an individual. You have dividend tax. You have a capital gains tax. You have stamp duty, which is a form of taxation, even though it's called stamp duty. Then you have corporation tax. You have VAT. There's many different classifications, and it gets complicated. If you're a director of a business, all of those taxes may well feature within your tax return somehow. The corporation tax won't feature directly on there, but you'll have involvement in producing a CT600, which is the tax form for the corporation tax. So it's not straightforward. Again, this is why it pays to speak to an advisor, because if the media is correct and there is a 30% penalty, I guarantee that would have been less than the accountant's fees to help resolve this matter. So think about getting professional help here, because you do need to keep good records. You do need to keep your receipts. You do need to know the rules, and you do need to know the tax. And knowing the rules and knowing the tax, it is not straightforward. During 2020 and the pandemic, I seriously lost count of how many different times the tax rules changed. Like, it's something where maximum of twice a year, when you get an autumn statement and the budget, they change. 2020 seems like it was almost a daily change. It wasn't, but that's how it felt. It was that frequent. So, and we're still in those times because of the economic uncertainty, that there are a lot of changes, and there's still going to be more to come. We're in January now, so it wouldn't surprise me if we have some announcements coming through in March about different plans. And as we get closer to election, you know what it's like. There'll be more tax announcements, I'm sure. But I don't want to get into the politics of general elections and tax giveaways, because that's not what we're here for, is it? Right, so that concludes a careless whisper and how you can avoid making a careless mistake or a reasonable mistake, or even a deliberate mistake, by keeping good records, keeping your receipts, knowing the rules, and knowing your tax. Right, so let's do some news and shizzles. So as I've discussed a couple of times, and it's in the weekly newsletter, I am hosting, I'm the group leader of a meeting which is called Get Your Geek On. As you can see from my background, if you're on the video, I'm quite geeky. I love Marvel and all that kind of superhero stuff. So we've got a business meeting, but it's got a geeky theme. We've got some cool changes there. We're going to move it from 10 a.m. on a Thursday. It's going to go to 6 p.m. So that does mean that you can focus on core business matters during the day. And it means that we can still do business at the Geeks meeting, but it can be a bit more lighthearted. There is also, I've been attending a regular online B2B meeting. I'll drop some links into that. There's some awesome stuff happening at that meeting. That is a national meeting that people attend. And because we're going to move the Geeks meeting 10 o'clock on a Thursday, we're looking at fortnightly, I believe. We're going to have a West Midlands focused meeting for that, because our office is based in the West Midlands. It'd be great to have some local business and to help other local business owners. So we've got some really cool things coming up with that, and that's all on the for networking front. Training, we've got some events coming up for that. on the 1st of February, we're relaunching our small bite-sized courses, and we're kicking off with Accounting Essentials. This is where we will demystify the ancient language of Accountanese, so that either when we speak to you, if you're one of our clients, you understand what we're saying to you, or if you just listen to this podcast, but you've got your own accountant, you can understand what your accountant's saying. We will talk you through the phrases that are there. We'll talk you through the importance of the different financial statements. We'll help you to understand how you can use those financial statements to boost your business. So that's the first one we've got. We've then got some zero training courses. We're going to have like an introductory 01. Then we're going to have it for more advanced users. We're developing a QuickBooks course, and we have recently been certified advisors for free agent very recently. So we'll be developing a course to bring out for that. We're going to be doing budgeting and essentials. That may well be a bit bigger than a bite-sized course. That may be a half-day one. And we're looking at getting the corporate training back on. That's probably, I'd have thought, going to be from April onwards, so stay tuned. You can go to the website, which is carlfordaccountancy.biz, for all of the details, and just hit the events button at the top of the screen, and I'll just list everything that we've got going on. And it's really is shaping up to be a really exciting year. In the news, there's not a lot of news from an accountancy and business point of view. The economy, it's still wibbly wobbly, timey wimey. Hopefully that will settle down. I covered the fact that in October and November, the economy decided it was going to defy the experts and do a little bit of growth. So high five, Mr. Economy. Well done for that. December figures haven't been released yet, although they have stated that retail and in I think it's specified shops, so we're talking high street retail sales were down, but it's no surprise because we had Black Friday, online sales at the end of November. A lot of sales were pushed into November. It's not surprising. And also, let's be honest, we're all seeing these brown UPS trucks flying around doing the Amazon deliveries. A lot of people are going online. It's a trend that high street retail is going down at the minute. I'm not reading too much into that until I see official official news coming out from a wider point of view. Literally, it's so crazy out there. You could speak to a sample of 10 people, 100 people. 50% of those will say, wow, I've never been this busy before. The other 50% will go, oh my God, the world's ending. I can't get any business. It's mental. I spoke to someone that they were saying, their electric bill has quadrupled. Like, that is just insane because you cannot quadruple your prices to cover that. It's insane that some places are doing well, others are struggling, and you can't even pinpoint it down to sectors. It's one where I think you've got to surround yourself with some good quality people and just focus. You've got to be really blinkered at the moment and just focus on you, your business, and making the best fist of what's out there. And if you do that, I'm sure good stuff will happen to you. I'm a big fan of positive thinking. We're knocking on the door of 30 minutes. And I think if I hit the outro button anytime now, we'll probably square this off for bang on 30. And I quite like that. So this is Carl Ford, Accountant's Log and a Captain's Guide to the Galaxy. And I'm signing off, people. Adios, amigos.